Hey, so we're just getting started with the Decibel, and we want to get your opinion. We've set up a brief survey, and if you fill it out, we'll give you the chance to win some prizes. Listen to the end of the show for details. I'm Tamara Kendacker, and you're listening to the Decibel from the Globe and Mail. So, it hasn't been this hard to buy a house in Canada in over 3 decades. An RBC economics report from last week said people haven't put this much of their earnings towards the costs of owning a home since 1990. In Toronto, the average is 68%, and in Vancouver, it's 75%. If you've been waiting to get into the market, this year is not looking great. How did we get here? And how did the pandemic make it so much harder to be able to afford a house?
People were sick of living in their small spaces, and they started looking for bigger properties, places with a garden.
Rachelle Younglai covers real estate for The Globe, and she's going to break it all down for us. That's today on The Decibel. So Rachel, can you start by giving me a lay of the land as of right now? How bonkers is the housing market in terms of prices and affordability?
Well, the average selling price is 38% higher today than it was at this time last year. And the average selling price for a home across the country is nearly $700,000.
Yeah, I saw this report from RBC Economics last week that said average buyers now have to spend 52% of their income on the cost of a typical home in Canada, which is the highest that it's been since 1990.
And in the 1990s, that was a recession and interest rates were a lot higher. I mean, if a house in Hamilton, Ontario is going for $800,000, I mean, there are not a lot of people that can afford $800,000. I was speaking to one realtor, a Toronto realtor, who was saying, he has clients that go to him and say, I can afford between $800,000 and $900,000 for a property in the Toronto area. And this realtor will say to them, well, you can't buy a house. You can only afford a condo. I mean, I don't know. I mean, this is the world we live in where $900,000 is not enough to buy a house.
Mm-hmm. So you recently wrote about how investor buying has rebounded in the pandemic and that investors are being accused of driving up home prices. And so who are the investors that we're talking about, and are they actually driving up prices?
Yeah, recent data from the Bank of Canada shows that 1 in 5 home buyers or home purchases are being made by investors. It's not really clear who those investors are. I mean, that 20% refers to people who have more than one mortgage. So that's how the Bank of Canada measured it. And so anyone who's buying a second property not to live in it, that's how they defined it. But if they do represent 20% of the buying, they are going to have an influence on home prices. We just can't quantify it.
Yeah, and why is that? Why can't we say that they are driving up prices?
Because on the flip side, they are also contributing to the financing of new homes. So many of those buyers are also people who are buying new construction homes, pre-construction condos, or pre-construction homes. And in order for any of those projects to get off the ground, a developer needs a certain number of buyers before they can get construction financing. So in a sense, investors are contributing to the financing of new homes. But we can say, yes, they're having an influence on prices for sure if they're adding competition in the buying market. But on the flip side, they're also contributing to supply.
Right. So we can't say for sure how much they're driving up prices. We do think that they are having an influence on prices. And everyone's been talking about this since you wrote this story about this big company, Core Development, which is planning to buy $1 billion worth of single family homes in Canada, right? There's been a huge uproar over this. And can you tell me why that is?
Yeah, so Core Development is an institutional investor. It's a company that is trying to establish a large-scale single-family home rental business. And they are trying to buy $1 billion worth of houses across the country to rent them out. And so people are upset because they see this as a threat to home ownership. They see Core as taking housing supply out of the market, housing that they could have had a chance to buy. they see core is increasing that competition, making it even harder for them to buy because now you're competing against a big company or an investor with deep pockets. So that is one of the reasons why, especially for first-time home buyers, why first-time home buyers were so upset about it, because they are already having such a hard time trying to save for a down payment. And now you see, oh, wow, a big company with all this money is going to come in and buy all these houses. And maybe that's a house that I could have bought. So that was the frustration and anger from the home buyer side.
Right. So that it's harder to compete against institutional investors who have a huge pool of cash to draw from, unlike the average person.
Right.
Yeah. I know that they're also the first big investor to establish a large-scale single-family home rental business, right? Mm-hmm. And the worry is that if they do well here, this could encourage other institutional investors like private equity firms and pension funds to join in a big way. And up until now, they haven't been focusing on houses. They've just been focusing on apartment buildings.
Yes. And also for a company like Core, who invests on behalf of their clients, what they're upset about is if Core or any big investor has to make returns for their clients, then where are you going to get those returns from? Is it from cutting costs, or is it by increasing the rent?
If we can't definitively blame investors for the spike in home prices, then what is actually to blame? Like, what do we know for sure is causing this? And how did it happen during a pandemic and during a recession? Just walk me through how we've ended up here.
Okay. The number one reason why home prices are up as much as they are is interest rates. Interest rates are very low. They're at 0.5% right now, which means that the cost of borrowing is super, super cheap. You can get a 5-year fixed mortgage rate for under 2%. That was pretty much unheard of until 2020. That's one reason the cost of borrowing is low. The other reason is that at the beginning of the pandemic and through most of 2020, people were sick of living in their small spaces, if they lived in a condo or an apartment or a small house in the city. And they started looking for bigger properties, places with a garden, places with access to the outdoors. And they were looking for this in the smaller cities and in cottage country, in rural areas and vacation areas. And that helped drive up prices in cities that have never seen this kind of activity before. Ingersoll comes to mind. It's a very, very small city. Guelph, Cambridge, bidding wars and places like that. Niagara on the Lake, Niagara Falls, St. Catharines.
Mm-hmm. And speaking of bidding wars, I know blind bidding has also been blamed for this spike in prices, right? And can you tell us a bit about that?
Yeah, sure. Blind bidding is when, if you are a buyer and there were other buyers interested in the same property, you won't know what the competition is offering. So you basically you're bidding blind.
So people are putting bids on homes, not knowing what everybody else is offering, and that is driving up these prices.
Yes, it can drive up prices because if you don't know what the other person is offering, then the winning bid can be hundreds of thousands of dollars over the second highest bid. And so if you don't know, then you could be outbidding everyone else by a huge margin instead of, I don't know, maybe 10,000 or 5,000.
There's one more thing that you wrote about, which I thought was really interesting, and that also seems to be driving up house prices, and that's intergenerational wealth transfer. And can you tell me about what's happening there?
Oh, sure. So just the idea that parents are giving their kids more funding or they're speeding up their inheritances so that their kids could get into the housing market. If they've made more money on their houses, they have incredible wealth built into their houses because house prices have gone up so much. They can draw from that if they want. If they have a second property, they can sell that second property. And the reason why is because it's very difficult to save up $200,000, which is the minimum amount you need to buy a house in Toronto, $1 million house in Toronto.
So the government so far has introduced changes to the mortgage stress test and made it a bit harder to qualify for a mortgage. Do we know if any of that has had a substantial impact yet?
That just came into effect in June. So we've only had 1 month of it. And by requiring borrowers to prove that they can make their monthly mortgage payments at a much higher interest rate, it shows that they have the ability to make those payments when interest rates rise. So if you talk to any economist or any realtor or anyone in the industry, they don't see this as having a huge impact.
Okay, so talk to me about some of the other solutions that have been proposed. Like, what else can the government do to cool the housing market?
Yeah, there are lots of ideas out there. And the biggest one is raising interest rates, making it more expensive for people to borrow. And we know that's going to happen soon or next year. Another one would be, and Bank of Montreal economists had floated this idea. And since then, a lot of people, realtors and others have joined in saying that we should bring more transparency to the bidding process. So open up blind bidding, make it more transparent. Maybe it can be an auction, or maybe the seller's realtor can disclose what the competing bids are to all the bidders. That would bring transparency into the bidding process. So that's one of them. Another measure that some realtors have spoken about actually is only having one round of bidding. So when you put in your offer, that's your best offer and that's it. So then the seller's realtor can't go back to all the other bidders and say, can you do better? You're close, bring it up a little bit.
How much support is there for bringing more transparency to the blind bidding process and for this idea of just having one bid from realtors?
There is growing support for bringing more transparency to blind bidding from realtors. And the reason why is because they too experience the frustration that their buyers experience when they are bidding on a house. And every realtor is going to represent buyers. Probably most of their clients are buyers. So yes, they would like to bring transparency to that so that their buyers are not so frustrated and their clients don't get angry at them.
Yeah, that makes sense.
Yeah.
So what about, so we have this tax on foreign non-resident investors. What about a tax on people who own investment properties here, who are just kind of sitting on them to make money? Is that something that people have been talking about?
Okay, so the tax, it's the empty home tax, that actually doesn't go into effect until next year. So that definitely is not having an impact. And they're still trying to figure out how it's going to work. The general working idea is that they will impose a 1% tax on the assessed value of your home if it's empty, but they haven't defined what empty is and in what locations, because a lot of people have property in cottage country that's only used seasonally.
You said 1%. That seems really low. Like, are economists expecting it to have any kind of impact?
Well, so if you own a house that's valued at $1 million, a 1% tax every year is an additional $10,000. So it's not that low. Maybe that would persuade you to rent out your property, or maybe it would persuade you to sell it. So economists don't expect this to have a huge impact. No.
A lot of the stuff that I've read says that the thing that would actually help is increasing the supply of housing. That's really the fundamental problem, is that we don't have enough housing stock. So is that true? And what's preventing us from building more houses?
Yes, you're right. Increasing the supply for sure. That is one solution for sure. And that is happening actually right now. Record levels of construction are going on right now, but a lot of it is on the condo side, not in single family. And the reason why is because land is expensive. And especially in the major job markets, well, Toronto being the major job market in Canada, land is very expensive and there isn't a lot of it. So yes, we could build single family homes in the prairies, but there isn't the same kind of job market out there. So people don't move to the prairies for work. They move to Toronto for work. And so developers build up because it's the most cost-effective way to do it. So there is a lot of building going on right now, and there is a lot of new supply that's going to be hitting the market in the next few years. But the majority is one bedroom or smaller. So yeah, we're creating more supply, but we're not creating the supply that lots of people want to live in, or that families want to live in. A family of 3, a family of 4 won't live in a one-bedroom apartment or a one-bedroom condo. That's not really feasible.
So do you think that this situation is going to get worse before it gets better in terms of prices and affordability?
I don't see how prices come down. If you want to be a homeowner, you want to buy a detached house, I don't see how prices come down unless interest rates go up at a very quick rate and people aren't able to afford their houses and have to sell them, and then maybe that will cool the market. But there's just so much demand for the same type of property. I mean, the other thing is that a lot of older Canadians have chosen to stay in their homes and not sell them because, first of all, well, what can they buy, right? There's nothing to buy. I mean, if you sell your house and you need somewhere to live, your options are you rent or you buy. And so if house prices are so expensive that you can't afford to buy your next property, then you stay in your house and you renovate it and you make it work. Maybe in the past, they would have downsized and moved into an apartment or a condo, but they're not doing that right now. They're holding on to their houses.
I know 68% of Canadians own their homes, and this is a very steady voting bloc. And so does the government have much of an incentive to try and lower housing prices if most of their voters are homeowners who are like making money on these houses?
I mean, I think the government does have an incentive to try to ensure that people have a place to live and that housing is affordable. But yeah, you're right. A huge chunk of the population is a homeowner and they don't want to see the value of their home go down, especially if they just bought it in the past year and they spent over $1 million on some small semi-attached house in downtown Toronto. They are motivated. We just haven't seen any results yet.
Rachel, thank you so much.
Thank you.
That's it for today. I'm your host, Tamara Kandaker. The Decibel is produced by Madeline White and Kasia Mihailovich. David Crosby is our editor. Angela Pacenza is our executive editor. Thank you so much to Rachelle Younglai. You can follow her work at theglobeandmail.com. If you ever want to reach out, email us at thedecibel@globeandmail.com. And if you haven't already, wherever you're listening, hit that follow button so you don't miss any episodes. Thank you so much for listening, and I'll talk to you tomorrow. And here are the details on that survey. We want to know about you and what you'd like to hear on the Decibel. Just go to thedecibelsurvey.ca, fill it out, and as a token of our appreciation, we'll enter your name to win one of 3 $50 grocery gift cards. Once again, that's thedecibelsurvey.ca. Please do it. It'll really help us make this show better. Thank you so much.